Okay, good evening, everybody. It is October 9th, 2022. It is Sunday night. It is roughly, I think it's about 8:45 p.m. Eastern Time here in New York. We are located down at 110 Wall Street tonight. We are working out at the WeWork office, but tonight we are going to be walking over to the Staten Island ferry. Then we are going to be coming off the ferry and checking out the New York Stock Exchange, the Fearless Girl statue, as well as the one and only Mighty Bull on Broadway. So there's a lot to talk about tonight. This is going to be a very, very busy week on Wall Street for a couple reasons. Now, I think the biggest reason that we all know, because we've been talking about it for so long on the streams, is that it is the official start of Q3 earnings season. Okay, so the official start of earnings season, and I think this is when we could potentially be entering what I like to call phase 2. So phase 1, I believe the major equity indices were discounted or marked down to take into consideration interest rate hikes from the Federal Reserve, right? Generally speaking, when rates are up, that puts a lot of pressure on those tech-heavy or those NASDAQ-heavy tech stocks, which has earnings priced out into the future, right? So as interest rates go up, the present value of those future earnings go down. But I think as we go through this earnings season, we've already seen this from the likes of AMD and other specific semiconductor companies. They've been actually cutting their earnings guidance and also cutting their earnings outlook as well as their gross margin. So we'll talk about that in a little bit more detail. But secondly, I think, first thing I want to say is we're going to hear from all the investment banks this week, okay? Obviously, every earnings season kicks off with the major financials. We are going to be hearing from BlackRock as well as Wells Fargo, JP Morgan, Citigroup, and the like on Friday. But we are also going to be hearing from the Bureau of Labor Statistics as they release their CPI number. Yes, the Consumer Price Index will come out on Thursday, and that is going to be very, very critical to watch, okay? Not only for that main headline CPI number, which includes the very volatile food and energy, but more importantly, the core CPI number, okay? That is the number that excludes volatile food and energy, and Fed Chair Jerome Powell and all the other central bankers really like to pay a good piece of attention to that news. So without further ado, everybody, I just want to say I hope you had a very restful weekend. Hopefully you are all well charged and ready to go for tomorrow. I'm just going to shut down my computer here and then we will get started, and I will say hello to everybody in the chat. All right. All right, team, we're ready to get the road work in. Gonna bang out some miles on this Sunday night. But let me say hello to all of our viewers in the chat. I see Otto is here, Mateo. Welcome. Vinny Castellanos says happy Sunday evening. Hey, Vinny, good to see you. Please extend my regards to Maria. Now, we may run into some issues with the internet here, so please bear with me. I see Wolf Theta. Happy Sunday to you, my friend. Hopefully you had a good weekend. Buy the book. Because we may run into some internet issues here. Hey, Abdullah is here. Mohammed. Hey, Mohammed. Welcome. I see Sally, GX. Hey, Wolf Theta, good to see you. Says I hope everybody and yourself has had a good weekend. I did have a good weekend. You guys want to get in here? Yeah. Cheers. Have a good night. All right, team, we are now out on the street. This is Wall Street. So there's actually a very nice WeWork location here. It is at 110 Wall Street. I think this is a multi-purpose building. So we've talked about this before. I'll quickly show you the address here. So all these buildings down on Wall Street, well, the vast majority of them used to be office buildings for obvious reasons, but developers in the city has done a fairly good job with restructuring or repurposing these buildings for multi-use, you could say apartments, condominiums, housing, hotels. And this really started to happen a while back. It's been a work in progress, especially as we have the introduction of algorithmic trading, programmatic trading. All the broker dealers don't need to be down here on Wall Street, right? And many people don't know, if you continue to walk all the way up Wall Street, one thing you'll notice is the New York Stock Exchange. And the New York Stock Exchange really isn't what it used to be. I mean, it's still an iconic, amazing place, but not a lot of trading goes on there, right? The vast majority of the trading goes on elsewhere, algorithmically, electronically. Settlements are in New Jersey. But tonight, let's see if we can get on the Staten Island ferry. We'll see how successful we are. I see William Brooklyn is here, Mark Anthony. Good to see you, Mark. Sen Miguel is here. Hey, Sen. Dan Zhang says, Tom, it's pretty crazy you're pulling all of those overtime on the weekend. Yeah, it's, yeah, we're hitting it hard for sure, Dan. But good to see you, Dan. Hopefully you had a fantastic weekend and you're ready to hit the ground running on Monday. Brian is here, says, hey, Tom, and everybody in the chat. Good to see you, Brian. My friend Paulette says, happy Sunday, Tom. We love you. I love you as well. Austin City Limits, our good moderator. Thank you for joining. So this building right here is 95 Wall Street. And this actually used to be, I'm not sure if it used to be City, but now it's absolutely beautiful apartments. So these are like condominiums, apartments. They're fantastic. Right here at 95 Wall. I actually remember when they just put the finishing touches on these units. So a lot of these old office buildings here, you'll notice if you look very closely, they're actually apartments. Let me say hi to everybody. I want to make sure I didn't miss anybody. Hey, Optimus Prime is here. Mike C. Vinny Castellano from Staten Island. Myra King is here. The one and only Solo 401. Always a pleasure to have you here. I see Tracy. I see Mohammed. Zach Drew. Good to see you, Zach. Fun fact, this is my old office. Right here on Water Street. And we were next to the S&P Global building, which is a couple more blocks down here. But this is Lower Manhattan. Very quiet tonight. And it definitely gets pretty cold in the winter too. Derek David Jr. is here. Welcome. Steve Bond Trader from New Jersey says, hey, Tom, good to see everybody. Matt says, hello, Tom, and everybody in the chat. Mr. Wonderful says, howdy, Tom and crew from Australia. Bernard Friedman, good to see you. So tomorrow, everybody, the stock market is open. However, the fixed income market is going to be closed. So the bond market will be closed in observance of Columbus Day, most recently changed to Indigenous Peoples Day. So for everybody who has off tomorrow, I wish you a fantastic day off. But we still should be live. If I'm not live tomorrow, we definitely will be live on Tuesday. So just keep in mind that stock market will be open. I think as of recording the video, I think futures are in the red across the board. I think last time I checked, S&P 500 E-mini futures were off about 50 points. Pretty much same across the board for the NASDAQ and the Dow Jones Industrial Average. But the most important piece of news, I think, aside from all of the major financial earnings of the major banks, BlackRock is up Tuesday, and we have pretty much the larger investment banks like JP Morgan, Citi, Wells Fargo. They're reporting on Friday. But we're going to get the CPI numbers out. And one of the things that's worrying me, I'm not sure about you guys, but that headline number is expected to come down. But the more important number, which is the core CPI, is actually expected to go up month over month. So as it relates to monetary policy, we could, if this report comes in hot, let's just say that, I think it's going to go up from about a 90% certainty that we're going to get another 75 basis point rate hike in November. I think futures traders are probably going to price in about a 95% certainty. And just to quickly review and remember, the headline CPI number includes volatile food and energy costs. And the only reason why headline CPI has been coming down is because over the past couple months, we've hit a high in crude oil, I think about $130 a barrel. We went all the way down to about 70, but we've since had a pretty strong rally off the bottom. And crude is, I think, back above $90 a barrel and back above its 50-day moving average. So this begs the question, is this a sustainable move in crude? Or is this a bear market rally in crude and we're gonna head lower? I don't know, we'll talk about it, but it's definitely not helping that OPEC just came out and announced an additional 2 million barrel production cut a week. Obviously, sending up prices even higher. Hey, Denise NYC, good to see you. This is good evening, everybody. Hey, Denise, Sabrina Ferris here. Dan Zhang says, Tom, crude is currently 92.13. Yikes. Yeah, and the interesting thing is, I thought that crude, because we were extended probably about 10 to 15% to the downside from the 50-day. I thought it was just going to rally back to the 50-day and roll back over, but we've managed to break above and hold, so we'll see how that plays out. Connor is here, says, hey Tom, what's up, Connor? Jeff says, good evening, everybody from North Carolina. Always a pleasure. So we are going to head to the Staten Island Ferry. I think Morgan Stanley is in this building still. And over here is JP Morgan. But JP Morgan's actually building a beautiful, brand new office building on Park Avenue. And I think I've taken you guys past there many times. Beautiful building. Tom G says OPEC doesn't matter, Saudi Arabia matters, 13 to 17% of known reserves, says Tom G. Taxi Cab says, hey Tom, good to see you. Yeah, Dan Zhang says, make sure you zip up your jacket, it's pretty windy. It is. I mean, it was a picture perfect day today in New York, though. Not too hot, not too cold, but it's definitely getting a little bit more chilly now that the night is setting in on us. YSK says, Tom, crude will be going up from now till the end of time. Yeah, I mean, we'll see. Now, what else is getting a bid is if you look at the ticker symbol XLE and XLF. Which are the ETF tickers for energy and the financial sector. Those have been seeming to get a pretty nice bid. YSK says, Tom, the reason it was going down is because they were tapping into the strategic petroleum reserves. Yeah, I mean, I think you may be right, but if you look at it on a larger scale, that really just the amount that they were releasing is not even enough to sustain the United States for a couple weeks. Ooh, I think we gotta hurry up here. I think we may have just missed it, team. Tom G says, move to the tropics, lower your needs for the energy. What about the AC? What if you run the AC 24/7 constantly? All right, we'll check the schedule of Staten Island Ferry. We'll see if we can get it. If the door just closed, that probably means the next ferry is going to be in 30 minutes. I'm not sure if I'm gonna be able to wait that long. We'll see. We'll test it out. Julia Julia M says, run, Tom, run. I think we all just missed it. I think we missed it by like 5 minutes. Now, granted, I am a little bit late starting the stream. I think we started at 8:40. I was just so busy. It's going to be a crazy week for me. We did just miss it. That's a bummer. All right, let's check. So this is the ferry that we just missed, but let's check the schedule. Let's see what we got. Van says, Tom, have you ever run into Casey Neistat in New York? I've not run into him. Not yet. All right, so this is departures from Manhattan Whitehall Terminal. Santos says, do not give up. Yeah, Line Sync says, we may be going for a little bit of a swim tonight. We'll see. Yeah, I think the next one's in 30 minutes. I'm not sure if I could wait because I gotta get the train. We'll do it tomorrow. I promise you guys I'll do it tomorrow. I think we just missed it. Bit of Wander is here. Says, hey all, good to see you, Bit of Wander. Welcome. Sunshine after rain. Always a pleasure to have you here. Cindy Foley says, bummer. All right, so let's do this. Let's check out the New York Stock Exchange, because I think a home builder company is going to be doing their initial public offering tomorrow. I walked past the New York Stock Exchange earlier today, and they had their banner hanging up over there. Sean says, hello, Tom from Wisconsin. Welcome, Sean. Good to see you. Well, we're getting another interesting piece of economic data on Tuesday. And we are going to be hearing, I'm trying to do the math in my head. You know, maybe if we go to the New York Stock Exchange, we'll just make the next one. I gotta say, we'll figure out what time it is, and then I'll do the math to see if I can make it all the way back uptown. Because I do have to get the train, Penn Station. If we don't do it tonight, we'll do it tomorrow, might as well. All right, so here we are outside the Staten Island Ferry Terminal. For those of you who haven't seen it, I'll give you one more quick look of the neon lights on the outside. Beautiful full moon tonight, by the way. Check that out. Now, on Tuesday, October 11th, we are going to hear from the National Federation of Independent Businesses as they release their Small Business Optimism Index for September. Now, consensus on Wall Street is for a 91.8 reading, which is some of the lowest readings on record. So maybe we could use this as some sort of a contrarian trade here. Now, I'm not saying just go long the markets because small businesses have a horrible outlook on the economy. But usually during times of extreme pessimism across the board, it tends to signal that you're getting at least a little bit closer to some sort of a bottom, I should say. But I don't doubt, and I don't think that these readings should come to us with any surprise. I mean, a lot of the small businesses have still not recovered since the pandemic. They've been told to shut down during the pandemic, comply with all of these, crazy mandates and laws and capacity restrictions. And just as the pandemic was ending and they could go back to operations in full capacity, they get hit with a double whammy of inflation. So think about that. I mean, and for any small business owners, I know we have a lot of people in the chat who own small businesses yourself. I know many small business owners on Long Island, not only in the restaurant business, in the electrical contracting business, HVAC business, home builders and the like, construction. And they had to invest so much money during the pandemic to comply with new rules, regulations as it relates to the virus. And then just as things start to open back up again and people start to return to restaurants in person, eating in person, the volumes may be up of people, but the raw materials and the food costs have gone up 35% year over year. And we're going to get even more data on this on Thursday as we get the CPI numbers. But it seems like small businesses in the United States have just been taking a pounding ever since 2020, complying with the pandemic, trying to do the right thing, keep everybody safe. But once we're open back up at 100%, their rents have gone through the roof. Think about that. Think of the cost of, renewing a lease if you're a small mom and pop, pizza shop or something like that, or even really anything. I mean, that is a huge, huge cost. And that's why I think we're seeing this trickle down effect to where we as the consumers pay a lot more money for basic things. I think today I was eating out. I actually went to this pizza shop that was right on Wall Street, and I got a mini, just sort of like a small pie, I think with pepperoni and sausage on it. It was $28. Pretty crazy. Pretty crazy. Hey, Road Dog is here. So what's up, Walks in Wall Street community? Good to see you, Road Dog. John is here, says, hey, Tom, welcome. Julius is going up again because of the cost of transportation with respect to gas prices. Yeah, I mean, we've been talking about that too. I mean, to your point, I've been seeing some posts on Twitter from my friends in California where gas prices are now over $7 a gallon. It's insane. Yeah, Mike Cease is $28. Yikes, isn't that insane? It was one of those things like when he told me the price, I'm like, whew, and I just paid it anyway. I'm like, all right, I probably won't come back here. Have you guys ever had an experience like that where they tell you the price, but you're not just gonna walk away because they already made it? You're gonna be like, all right, I'll pay it this time, but I don't think I'm gonna come back. Yeah, Tom G says, if you're poor, unemployed, rising prices are simply scary. Yeah, and I think that was, Fed Chair Jerome Powell's point when he made that speech at Jackson Hole. Does anybody remember what he said? Now, this is what's caused a lot of controversy on the street. And you'll have a lot of, even academics, like professors, a lot of economists, a lot of very notable portfolio managers who I respect, that is saying the Fed is flying blind, they don't know what they're doing, and they're looking at lagging economic data. Because all of the leading economic data that we're getting shows that inflation is going to come crashing down. But if I could play devil's advocate for a little bit, really quick, this is Broadway. We are right at the Mighty Bull. So we'll quickly show you guys the Mighty Bull, and then let's go over to the New York Stock Exchange. But to Fed Chair Jerome Powell's point, and I think to many people's point here in the chat, what Jerome Powell said at Jackson Hole was this. He said, inflation really, really hurts the people who are living on a fixed income or people who are in the middle class. Because if your grocery bill is going up 14% every single year, so year over year, let's say if you budget $100 a month for fuel, and that $100 a month only gets you about half as what it got you a year ago or maybe even 2 years ago, well, that's really going to force a lot of American consumers in the lower class or the middle class to say, well, now that inflation is ramping, I'm really going to have to make a choice here between paying my grocery bill or paying my cell phone bill, even paying my mortgage, keeping the lights on. So people who make a lot of money on Wall Street, or people who have good jobs, maybe the household income is above 200,000, is inflation at 9% per annum hurtful and harmful to you and your family? Yeah, of course it is, but it's a mere inconvenience. Who it's really hurtful and harmful to is maybe seniors living on a fixed income, right? Maybe you are getting Social Security. Maybe you have a dedicated budget for groceries every single month that's $400. You can't go out into the workforce because you're a senior and make more money to make up for that inflation, you're just getting crushed. So what Fed Chair Jerome Powell was saying at Jackson Hole, he's like, look, we got to really, really take inflation seriously. And if that means that we overdo it or run the risk of overdoing it, so be it. So a little bit of devil's advocate there. Timothy McGlynn says, yes, I agree in terms of the seniors. YSK1321 says, how are we going to have a world where AI is replacing everybody? Well, we sort of talked about this yesterday on the stream. And if you look at a lot of the R&D budgets for a lot of, especially like Amazon and Walmart, during the 2020 COVID crisis, I think this was in Q3 or Q4 2020, these businesses spent more money investing in robotics to automate their warehouses than ever before. But if you actually look at the data, and we analyzed this last night on the stream, Americans really don't want to do this monotonous and tedious warehouse tasks, right? It's very monotonous, very tedious, and very labor intensive and laborious to work in a warehouse. Let's head up to the New York Stock Exchange. I'm going to show you guys some cool stuff up there. Show you Federal Hall. So Amazon, I believe right now has about 1.5 million employees. And I believe there was a McKinsey study that said by 2024, Amazon will have burned through 100% of their talent pool. So that means by 2024, all the people who Amazon could potentially hire to work in their warehouses, they've either already hired before or they will have gone through them completely. So what does that mean? Well, that means they have to start automating some of these tasks away. And I think you're going to start to see that. Now, what they call fourth generation automation as it relates to the warehousing sector, manufacturing sector, is something called lights out. In which case you could walk into a warehouse, there'll be no lights on, it'll be pitch black, and these robots will be programmed to pick, pack, and ship without any human involvement. I think that's probably about 7 to 10 years away. But what you're going to start seeing is gradually robots are going to be replacing the more monotonous, tasks of, maybe going to the bins, picking this product, putting it in a package and shipping out. So hey, Deborah S. says, how will it cause the middle class to keep houses? Well, what do you mean by that, Deborah? Could you clarify a little bit? Hey, Space says, we will probably live in a very different lives in 10 to 15 years. Yeah. I mean, just think about your life 10 to 15 years ago. Extremely, extremely different. Many people tend to be afraid of AI, things like that, but you are already a supercomputer. You are already a robot. If you really think about it. I mean, think about, everybody probably has a smartphone, right? Smart TV, whatever you're watching this live stream on. Think about when my parents were in high school. If they were asked like a trivia question, who is the president of, Nambia, or any random trivia question, it would probably take them hours to find that answer to that question. Me, I just say, hey Siri, who's the president of Nambia or Nigeria or whatever, right? You get it. And I get that question answered instantaneously. So you're already a supercomputer, right? You can in theory have the answer to almost anything instantaneously. And when our parents were in high school, they would have to go to the library, open up a book, figure out where that book was located in the library. Now it's just I don't even have to use my fingers to type. I just literally ask my assistant, Siri, or Google Assistant. So I really don't think that people should be afraid of AI and automation, because if you think about it, we are already supercomputers, pretty much. All right, but more importantly than supercomputers, this is the beautiful New York Stock Exchange. You guys can see it right here on the corner of Wall Street. Absolutely beautiful. Now, the bummer is After 9/11, they actually closed down the stock exchange for tourists. So it's not like you could go in the stock exchange, walk around. It's not like you can go in the stock exchange, walk around, and anybody could just tour it. After 9/11, they unfortunately closed that down. But I think a lot of people sort of not truly understand the New York Stock Exchange, because it's almost, and I'm not trying to knock the New York Stock Exchange, but it's really mainly just like a TV studio now, right? I think CNBC's, Mad Money with Jim Cramer is there. I think Yahoo Finance, maybe Cheddar TV, but very, very few trading activity and market making actually goes on here anymore. Now, there is still some trading activity, but definitely not as much as it was back in the day. So here we have it, ticker symbol DFH, listed on the New York Stock Exchange. This is Dreamfinder Homes. Very cool. But you guys want to see something even more interesting? So right across the street here is Federal Hall. Now, the thing that kind of sucks about this, you see all this scaffolding here? This is going to be up here for 10 years. So when I used to work down here, I used to work on the corner of Wall and Water Street. I actually used to have lunch right on the steps of Federal Hall, looking at the New York Stock Exchange, right next to the statue of George Washington. But unfortunately, I think what happened was the city of New York, the building inspectors, did like a code assessment on this building, and supposedly there was some really, really dangerous and egregious violations here. So they are going to be doing construction for about 10 years to restore Federal Hall. So if you're visiting New York anywhere between now and 10 years from now, unfortunately you will be seeing this scaffolding everywhere. But you'll still have a pretty good view of the New York Stock Exchange. Hey, Sunshine NYC is here. Good to see you, Sunshine. Always a pleasure to have you. JC Trade is here. This is very cool. This is the Fearless Girl statue over here. Now, speaking of home builders, Dreamfinder Homes, I think the founder of Toll Brothers unfortunately passed away this weekend. Did anybody hear that? So Robert Toll, he was born in 1940. He passed away this weekend. And Robert Toll was the co-founder and chairman of the home builder Toll Brothers. He died at 81 years old. Toll and his younger brother Bruce built one of the leading luxury home building companies in the United States. So definitely rest in peace. Lena Sandoval's here, says hey Tom. Hey Lena, good to see you. Marcy is here, says hey everybody. Hope everybody's doing well. I'm doing really good. Doing really good. We missed the Staten Island ferry by about 5 minutes. I started the stream late. I was too busy. I was building a couple slide decks for tomorrow. This is the Fearless Girl statue right outside of the New York Stock Exchange. Tom G says, universal income, is that going to be real? Well, I think I've given my take on universal basic income before, and it's a little bit strange, my take on universal basic income, being that I tend to lean more conservative in nature, but the space that I work in is, tech and software sales. So a lot of the products that I actually sell sometimes automates a lot of these, tedious and monotonous tasks. So if we just think about the big total addressable market of artificial intelligence, automated driving, right? So self-driving technology, 5G. A lot of this technology is going to be so powerful that's going to essentially wipe a lot of these jobs off the face of the earth and make them obsolete. However, the good news is, for every probably 1 or 2 jobs that are destroyed by AI, machine learning, and autonomous vehicles, there's probably going to be about twice that number of jobs created, but they are going to require a completely different set of skills, right? These are going to be very, very in-demand, very high-skilled jobs. So I think what will need to happen is either for the government or private entities to subsidize some sort of training program to retool and retrain a lot of our employees to operate and survive in a modern economy. So in that instance, if we talk about universal basic income like that, to say, look, we need, like, let's say the truck drivers out there, something like that. If you say in 10 years, you're probably going to have about 40% of the trucking industry, freight and rail, be automated. Well, then, yeah, I would be in favor of providing them some sort of a stipend to retrain and retool so we could reappropriate their resources elsewhere, if that makes sense. That's always my favorite shot of the New York Stock Exchange right there. Hey, Lily is here. Good to see you, Lily. Catherine says, hey all, can you see my post? We got you. Loud and clear, over and out. Very quiet on Wall Street tonight. Let's take a look at some of the ticker tape. So you got Johnson & Johnson coming across the street. JP Morgan earnings are up on Friday. Coca-Cola. Charlie Richardson is here. Hey, Charlie, what's up, man? Always a pleasure to see you. Thank you for joining us tonight. I'll take you guys past the old Deutsche Bank tower. So Deutsche Bank is right down the street here. But Deutsche Bank actually migrated uptown now to the Time Warner Centers. Now it is called the Deutsche Bank Tower. Hey, Green Star TV says, Tom, did you pass the Federal Reserve? We haven't, but we will. We'll pass the Federal Reserve tonight. I think it'll be quite fitting for the stream to pass the Federal Reserve because we are going to hear from the Federal Reserve this week. On Wednesday, October 12th, the Federal Open Market Committee will release their minutes from the September monetary policy meeting. Now, we sort of already know probably what they're going to say. You know, from that meeting, it did produce about a 75 basis point rate hike, which took the Fed funds rate to about 3.25%. But I think it'll be good just to get an update just to see where the Fed's head is at. But I think they are going to be very, 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 very steadfast with continuing quantitative tightening and raising interest rates. Now, I already gave you guys the link. I would check out the Fed balance sheet because the Federal Reserve is now offloading US Treasuries at their fastest rate in 14 years. So this is a very iconic building. I want to tell you guys about it. This is the Cipriani on Wall Street. Now, does anybody remember after the 2008 financial crisis? I would say probably in 2011, 2012. The Occupy Wall Street protests started down here at Zuccotti Park. Now, there's a very, very iconic piece of footage where all of the Occupy Wall Street protesters were walking down Wall Street right past the Cipriani, subsequently past the Deutsche Bank as well. But one of the things that was interesting, and I think if you guys type in Occupy Wall Street, New York City 2012, I think this is the first video that pops up. And what you'll see is a lot of bankers standing in the balconies here. I'm not sure if it's too dark on the streams, but you guys see all these balconies right here? You could actually, there's actually tables, chairs, things like that when they have big venues. But you see all these bankers, you know, drinking alcohol, having a good time and partying, laughing, and taking pictures of all the Occupy Wall Street protesters. And it's just such an iconic piece of film that was taken in New York because it really just showed what I like to call the two-tier society, or the creation of one, which I think is mainly caused by central banking and very, very lackadaisical monetary policy. But it sort of just brings back memories of really what happened in 2008, where the average person, the common person on Main Street, was fleeced at the expense of bailing out all these banks. Now, granted, many bankers did feel the heat, especially if you worked at Lehman Brothers or something like that. And let's say if the vast majority of your compensation was tied up in, you know, stock of Lehman Brothers, let's say if you were a managing director worth, 12 to 13 million dollars on paper, but once Lehman Brothers failed and the stock went to zero, well, you probably weren't feeling too well. So this is 60 Wall Street. As you guys can see, it is all boarded up here. But this used to be the Deutsche Bank. I'm not sure what they're gonna make it into, but I used to walk past this building every day. And this is Deutsche Bank, which is the German investment bank. Now, there's a kind of a big joke on Wall Street that Deutsche Bank is not a big bank. But it used to be right here, 60 Wall Street. It's so strange to see everything boarded up like that. But again, they did move uptown to 59th Street, Columbus Circle at the Time Warner Center, now known as the Deutsche Bank Tower. Days works as that was crazy. Yeah, I mean, that video is really just a crazy, crazy piece of film. Traveling East, this is 2008, a year I'll never forget. And many people are trying to make the comparison. This is a good coffee shop, by the way, Loch Cologne, right here. Very good if you're ever down on Wall Street. Now, many people are trying to make the comparison of the 2008 financial crisis when a lot of people started to default on their homes to sort of the housing market of right now. And many people are predicting a sort of 2008 style decline in real estate this time around, but I don't think you're going to see it with that much force. Now, I think you're going to see housing declines, but I don't think you're going to see the broad-based declines that were really brought about by many people defaulting on their loans at the same time. Mainly because the underwriting standards are much, much better this time around. Okay, if everybody remembers, we've reviewed this many times, but leading up to 2008, much of these home loans were underwritten very poorly. I mean, these people, they didn't even check any income verification, very, very poor credit scores. And there was a large number of these loans that were actually ARMs, or adjustable rate mortgages. So what had happened is a lot of individuals were locking in great rates, very low rates. However, when the Federal Reserve started to raise interest rates and that 10-year yield started to spike, well, the interest rates on their mortgages also started to go up, and they were hit with balloon payments. So let's say if your average monthly mortgage payment was $1,500, interest rates go up. Whoa, now I'm paying $2,000 a month. I can't afford that. You miss a couple payments, you default on the loan, the house goes into foreclosure and goes back to the banks. So I think that's one reason. And I would like to say, in all fairness, I'll take you guys just real quick. I think in all fairness, by the way, there still exists adjustable rate mortgages. Okay, ARMs still exist. They're not a thing of the past. However, they are structured in a very different way. Very, very different. Where oftentimes there's actually caps on the amount that your rate can go up. So even if, a lot of people are starting to get hit with their rates going up, it's not like it's going to jump so egregiously like it did back in 2008. Yeah, Dusty Cole says ARMs are bad, and the loan writer kept his commission. Crazy. Yeah, and I think that's why, this, and we sort of talked about this, Dusty, I think you're right, the moral hazard situation, right? Everybody in 2008 was talking about moral hazard. Well, if we bail out these banks, well, what's to say that they're just not going to do it again, right? It's sort of like if you're a little kid and your mom tells you not to touch the stove, you touch the stove and you get your hand burnt. Right? But if we have all of these greedy bankers that were essentially incentivized to write all these bad loans, if we just bail them out, what message is that sending? Is that going to make them not want to take on risk, or is it going to do the complete opposite, where the bankers will say, wait, we could take on as much risk as we want because we're just going to get bailed out? I think it's a good point. All right, we are going to cross Maiden Lane. And I think the DOI, New York City DOI, used to be right here on Maiden Lane, which is the Department of Investigations. My friend used to work down here. We used to grab lunch all the time and go eat right over here. Hey, Alan S. is here. What's up? Mike ceases including refinances. I've had at least half dozen mortgages, never had an ARM. And I think that's a good choice. I would never recommend getting an adjustable rate mortgage, ever. Gary Carpenter says, I've got a new bank account. Very nice. Deborah S.'s lawsuit filed against them. Hey, Michael says, hey, Tom, how is everybody doing? Good to see you, Michael. Thank you for joining. Melee says, good evening, Tom, from Scranton, Pennsylvania. I see Gene says, good Sunday evening, Tom. Hope you are well. I'm doing really good. Thank you so much. Stephen D says, Big Short, the movie was fantastic. Yeah, exactly. Jerry's like, Tom, in 2008, a monkey could have gotten a home loan. I mean, and that's the problem, right? But the good news is the underwriting standards are a lot better this time around. However, this is what I will say. But really quick, check out this full moon here. Beautiful full moon here in New York City. Fantastic. So many people, and this is where the criticism of the Federal Reserve comes into play. And I think it's important to talk about this because, you know, we're going to hear from the Federal Reserve on the 12th, which is Wednesday, as we hear their Fed minutes from the Federal Open Market Committee. And then we are going to hear from the Bureau of Labor Statistics at the CPI report. And we're probably going to get some comments from the Fed then. But there's many people on Wall Street, many economists, money managers, and even, wow, check that out. Really nice flowers here. So a lot of money managers and even academics, so professors, they're saying, look, every single leading indicator is showing that inflation is going to crater next year. But the Federal Reserve is still being headstrong and they're raising rates. And then you have the other side saying, well, then how come home prices aren't coming down? Well, I think I can explain that, and this is just my opinion. When interest rates go up, it's easier to re-rate an equity or a bond, right? Because you really need to think about liquidity. And I want everybody to think back. This is the South Street Seaport, by the way. Very beautiful neighborhood, very beautiful area. Take you guys on a quick walk through it. Now, one of the interesting things about that is I want you guys to remember back to your Finance 101 class where they would say, okay, everybody open up your textbooks and I'll show you a balance sheet. And the balance sheet is in order of liquidity. Does anybody remember that? I'm sure everybody remembers that from their college finance classes. So you have your cash and equivalents. You have your marketable securities. You'll have your property, plant, and equipment all the way at the bottom. So this is sort of my take. It takes a while for interest rates to really show up in regards to price declines in the market for real estate, because it's less liquid of a market than the equity market, where if interest rates go up, okay, traders just price that in automatically because they could just sell stock and reprice it. But with real estate, you have to list it on the market, you get a couple offers, it sits on the market, you know, after 30 or 60 days, it's not selling. Maybe you talk to your real estate agent or your listing agent, and your listing agent says something like, you know what, this has been sitting on the market for 60 days. I think it's appropriate for a 5 to 10% price reduction. Then prices start to come down. It's not like interest rates just go up and then all these homeowners are just going to discount the price of their home. It's not going to happen. So this is why I've been really strong here to say, I think you're going to see the vast majority of price declines in real estate starting to happen in Q1 and Q2 of next year. Because as these homes sit on the market for a month or two, home sellers are going to be forced to reduce their price to match the buyers, because interest rates on a 30-year fixed rate mortgage have gone from 3.5% to now 7%. So that means buying power is essentially cut in half. So I think prices will need to come down accordingly. JC Trade says the Hunter's Moon will reach peak illumination at 4:54 p.m. Eastern, Sunday, October 9th. Hey, Deborah S., good to see you. Julie M. says, I agree with you, Tom. Yeah, I think it's just going to take some time. I mean, just put yourself in their shoes, right? If you're selling a home, you know, just because rates go up, you're going to say, look, the house next to me sold for $600,000. You know, my house is not too far away from that house. My house is just as close to public transportation. I just remodeled my kitchen, so why couldn't my house sell for the same thing? Well, your house, your neighbor's house sold last year when interest rates were 3.5%. You're trying to sell when interest rates are 7%. So one of two things is going to happen. It's going to take you a little bit longer to sell your property, or you're going to have to reduce your price to match the buyer's budget. So I would just say be patient. But the good news is, because I don't really like talking all doom and gloom, the good news is if you're looking to buy your first piece of property, maybe your first investment property, I think in Q1 and Q2 of next year, I think you're going to get more attractive pricing and potentially more attractive terms. You're going to have more negotiating power. Does anybody remember during the pandemic, all of the buyers were like falling over themselves to offer $100,000 over asking? You know, it seemed like people were just in a competition to overpay for property. I think you're going to see a lot of that stuff reverse. So I would just be patient. Don't rush into anything. Don't overpay. And I think you'll be fine. Yeah, Marcy, you're right. It says also last year people were paying way over asking price. So true. All right, I'll give you guys one quick restaurant tip recommendation. This is one of my favorites here. This is the Momofuku Noodle Bar. Now, I usually go to the one in the Deutsche Bank Tower or the Time Warner Center, but I'm sure this one is just as good. Hey, Christian Suarez, good to see you. Thank you for being here. Patrick, New York is joining us. Good to see you, Patrick. Thanks for being here. Mary Ellen says, have the businesses recovered in New York City from COVID, or there's still a lot of empty buildings? You know, I think we're making a pretty strong recovery. Now, one of the things I have noticed, and I'm not sure about you guys, the weekends on Saturdays, I would say Fridays, Saturdays, and Sundays, the foot traffic in the city is just massive. I would even argue that on the weekends, the foot traffic may be even busier now than it was pre-pandemic on the weekends. And there was actually an article in the New York Post about that. And what they said is that since everybody is working remote, for the most part, or in like a hybrid work situation, a lot of people tend to come in to the city on Fridays, Saturdays, and Sundays, you know, to go out to eat, go to a show, and just sort of make a day to do recreational things. So in my experience, walking the Upper West Side, Midtown Manhattan, on the weekends is way more busy than the weekdays. Stephen D says, nice view, love the water. Daid Lives is here, good to see you. Abdullah Drew Johnson, FredEx, good to see you. You know, if you look all the way in the distance here, this is the Verrazano Bridge that connects Brooklyn to Staten Island all the way over there. And you could actually see the Staten Island ferry coming by. This one. So on Wednesday, we are also going to get another very important piece of economic data when the Bureau of Labor Statistics releases the Producer Price Index for September. Many economists on Wall Street are forecasting that the PPI will jump 8.4% year over year after an 8.7% increase in August. The core PPI, which excludes volatile Food and energy prices is seen rising 7.2% compared with 7.3% the previous month. So tons of inflation data is going to hit the market this week on top of the start of Q3 earnings. So I think you're going to see volatility really ramp here, because a couple of things are going to happen. We're either going to get really egregious inflation data. Now, again, when you watch CNBC and you watch Bloomberg, they're going to focus on the headline number. Now, I would suggest to focus on the core CPI, which excludes volatile food and energy, because the Fed puts more credence on that number as it relates to them setting the tone for their monetary policy, whether they're going to raise interest rates or not. And the concerning thing is that in the CPI, core CPI, many economists are expecting an increase, an acceleration month over month, not only year over year, but also a month over month increase. So could you imagine if we actually come in above those estimates? I think you're going to see this market take a massive plunge if that happens. Sort of how I said on Thursday night's live stream that we're going to get the non-farm payrolls out on Friday. Many economists are expecting about 250,000 jobs added. I said if we come in above that, this market's going to crater. And it did. I think you're going to see sort of the same thing here. And the reason for that is because the Fed has a very tight mandate to crush inflation at all costs. Now, I think we could really argue till the cows come home that if these interest rate hikes are actually going to have an impact on inflation or not. And I definitely respect that. But at the end of the day, the Federal Reserve has said if we get bad news as it relates to inflation, we're going to raise rates higher. So that's sort of the parameters I use. So as of doing this video, I think futures traders are pricing in about an 85% probability of a 75 basis point rate hike at the next meeting in November. Now, keep in mind, the Fed target rate right now is 3.25. There's some people think that we're probably going to get to 4% by Q1 of next year. So I think if we get hotter inflation data this week, I think you're going to see that number jump to about a 90% probability of a 75 basis point rate hike. And you could really see the markets blowing open here. But Tom G says, what's the real unemployment rate? 37%. Yeah, so I know what you're saying, Tom G. And this is sort of why I tend to focus on the labor force participation rate. Now, another concerning thing to your point is that the unemployment rate, the most updated one that we got on Friday, the unemployment rate went down. The Federal Reserve wants to see that unemployment rate going up. From 3.7, we're back down to 3.5. And that essentially means there's going to be continuous wage pressures too. I think hourly wages came in at about 5.5% increase per annum. So just don't fight the Fed. All right, team, back on Water Street. Jose is here, says hello, Tom. Good to see you, Jose. Thank you for being here. Roy S., welcome, man. SoCal Lawrence says, where is he at right now? It looks very nice. So we're in Lower Manhattan. So this is on the corner of Water Street. What is the cross street here? And Fulton Street. And we just sort of walked the South Street Seaport. But we are going to continuously walk up Fulton Street because right as we make this turn near the TD Bank, you guys are going to see an amazing view of the One World Trade Center. And I think the spire may be all lit up in red tonight. But you're going to see a beautiful view of the One World Trade Center coming up here in a minute. Green Star TV says, Tom, would you live in this area? I would. So I would, but here's the thing. I got to warn you guys. If you're thinking about moving to New York, I will warn you about Lower Manhattan. If you want to live in Lower Manhattan, you really have to be comfortable with the cold. Now you're saying, well, what do you mean? Isn't it, if it's cold in New York, it's cold everywhere? It's probably twice as cold down here in the winters. I worked down here for many years. And in the winter, this place gets very windy. And it is bitter cold. probably because you're right on the water. So I would say that is really the only drawdown of being in Lower Manhattan. It is very, very cold down here, especially in the winter. But my all-time favorite place to live would probably be in between 66th Street and probably about 90th Street, between West End Avenue and Central Park West on the Upper West Side of Manhattan. I think that is the best neighborhood for you to live in. Hey, yeah, says, what's the most deep value, Alex? So you're gonna see the Woolworths building? I think there's a crazy apartment in there that's going for over $50 million, I think. Good to see a deep value, Alex. Tracy says Lower Manhattan floods. That is also true. Now, it doesn't really flood. It only floods on major events, most notably Hurricane Sandy. I love looking at these alleyways here in Lower Manhattan. But yeah, Hurricane Sandy, this place was submerged, as was parts of Long Island, Nassau County, Suffolk County, mostly South Shore. So if you turn down here, everybody, and go down Gold Street, about 2 blocks, you're actually going to hit into the Brooklyn Bridge. But there's also a very, very famous, maybe I shouldn't say famous, but prominent, very notable university here. It is called Pace University. And they are very, very known for their business school. Very, very good school here in Lower Manhattan. But here's my favorite thing about Fulton Street. You have this beautiful view of One World Trade Center right here. Absolutely fantastic. Ethan R says, Tom, can you repeat your favorite neighborhood boundary? I missed it. Yeah, for sure. And again, this is very opinionated, but if I had to choose anywhere to live, and let's say if I had kids or something like that, it would be between 66th Street and about 90th Street, between West End Avenue and Central Park West. And the good thing about that is you get all of the Museum of Natural History, you get the best of both worlds as it comes to the parks. You get Central Park, you get Riverside Park. So that's where I would live. Oh, Green Star says, I lived at the Pace dorm on John Street. Interesting. So I think if we make a right here at the Chipotle, there'll be a Bear Burger. I'm not sure if it's still there. But check that out. That is a perfect shot of the World Trade Center. That's awesome. Roy S. says, Tom, I'm still amazed at your decision to move to Central Park during the lockdowns. Good deal. Yeah, I think I scored a pretty good deal. Now, my only regret, here's my only regret. I'll tell you guys my only regret. My only regret, and this is something I really can't control, by the way. Since we're down here, I'll take you to Pace. Might as well. I haven't been down here in a while. Now, my only regret is not being a little bit older during the pandemic and having more money saved, because I would have bought big time in Manhattan. Because if you pretty much bought anything, just closed your eyes and threw a dart, you essentially doubled your money. I mean, my rent doubled. But that's the biggest regret. But nothing I can really do about that. Dan Zhang says, Tom's money's not a problem. Would you live in a penthouse on Billionaires Row, townhouse in Upper East Side, or a loft in Soho? Oof. And I can only choose one? All right, Dan, that's a good question. All right, so if money wasn't a thing, like if I could just spend it on whatever I want, okay, let me reread your question. I got to mentally prepare for this. All right, if money wasn't a problem, would you live in a penthouse on Billionaires Row, townhouse in the Upper East Side, or a loft in Soho? I gotta choose my favorite building, man. Well, one of my favorite buildings. And one of my favorite buildings is the 157 building, which is actually the first building that kicked off the entire trend on Billionaires Row. So I think I would choose to maybe live there if money wasn't an issue. So I think this is another newer type dorm. I think this is 33 Beekman Street. I think this is also a Pace University dormitory as well. But what about you? I think I would say Billionaires Row. Yeah, a lot of people are saying the Soho loft. That is... The only thing about that, though, I mean, if you're 100 stories in the sky, you're gonna have a really, really nice view of Central Park. All right, so here's Pace University. Known for their business school. Very good school here. A little expensive, I would say, but if you have the money and money's no issue, or you got a scholarship, go for it. And I think this campus is located in a fantastic location, because you're right next to the Brooklyn Bridge. You're literally right on the on-ramp of the Brooklyn Bridge. You have easy subway access to go to either Brooklyn or Midtown Manhattan, close to the World Trade Center, Wall Street. Very, very prime location here. Yeah, the Lubbock School of Business. It is expensive, but they are good at giving scholarships. Yeah, it's a very, very good academic institution here. Got yours. You don't think with high interest rates that NYC Norma. Maybe your comment got cut off. Maybe you pressed send too soon. But do I think prices are going to normalize? I do. I do. I mean, with 7% rates, I mean, just do the math on it. I think it's pretty easy. I mean, do the math on a $500,000 piece of property, 20% down payment, and 7% rates as opposed to 3.5% rates. It's about an 80% decline in purchasing power. Okay, so this is Spruce Street. You know what, since we're so close to the Brooklyn Bridge and we couldn't go on the Staten Island ferry tonight, I'll let you guys decide. Should we just take a walk halfway over the Brooklyn Bridge, or should we head uptown? I'll let you guys be the decision makers there. Julie M says, Tom, what is Qqq? So Qqq is an ETF that tracks the NASDAQ 100. So ETFs, you could either dollar cost average into them, but many people use the Qqq to trade options on it. But it's just like a product that will allow you to gain exposure to track a broader indice. And in that case, the Qqq is the NASDAQ 100, which you're going to get a lot of tech exposure. So it's a very, very high beta. Connors is uptown. Uptown Bridge, Brooklyn Bridge, uptown. Wow, we're split half and half. Was not expecting that. Hey, Plains and Palm Trees is here. What's up? All right, how about we'll do this. I'll give you guys both. We'll choose both. I always say you could choose both. So since we're split 50-50, we'll go about 25% of the way over the bridge, and then we're gonna go gangbusters uptown. We're gonna get uptown so fast, you're gonna be like, oh my God, did Tom just get uptown that fast? That's what you're gonna say. Watch. So we'll go over the bridge, and then I promise we're gonna head uptown. I gotta go back to Penn Station anyway. And I think it'll be good to go over the Brooklyn Bridge because there's not a cloud in the sky. It's a full moon. and you're gonna see an amazing view of Lower Manhattan. Beautiful night, so we'll do both, might as well. All right, really quick, Friday, everybody. This is gonna be a very, very important piece of economic data as well. We are going to hear from the University of Michigan as it releases the Consumer Sentiment Survey for October. Okay, so earlier in the week, we are going to hear the small business sentiment, which is supposed to come at some of the lowest readings we've ever seen in history. And then on Friday, we are going to hear from the University of Michigan as they release their Consumer Sentiment Index. Consensus calls for a 57.5 reading, about 1 point less than the September data. Consumer expectations for inflation is 1 and 5 years, for 1 and 5 years, were 4.7% and 2.7% respectively in September. Those readings are each expected to decrease by 0.1 percentage point. So over the next 1 to 5 years, consumers still think inflation is going to be relatively persistent. But it seems like we may be seeing a little bit more of a, I would say maybe an emergence of a trend where consumers are maybe a little less depressed than they were during the pandemic. So maybe that's good news. I think if you could call it good news. But one of the things that I like to do is, number one, closely watch the Institute for Supply Management Purchasing Managers Index, which we talked about on Monday. Okay, so the first business day of every single month, the Institute for Supply Management will release their PMI numbers, which came into some of the lowest readings we've ever seen. Ooh, I don't know if we can go over. I think there's too many people. All right, we'll quickly brave the people, and then we'll come back. But I actually like to overlay the PMI numbers with the University of Michigan Consumer Sentiment Index, because usually what you'll see is as the Consumer Sentiment Index starts to pick up and head higher, there's usually about a 2-month lag, but you actually start to see those PMIs turn up and go higher as well. Now, I've sort of explained this already, but I think it's very important to maybe go over it one more time. It's not necessarily the number that matters for the PMI. It's the trajectory of those numbers. So for example, many people will say, oh, just because the PMI numbers are at 50 or above, it means that the manufacturing sector of the economy is expanding. But if you look at the numbers in October of 2021, that is when the PMI numbers started to roll over. And subsequently, January 4th of 2022 is when the market started its bear market decline. So always plot the trajectory of those PMI numbers, as well as the University of Michigan Consumer Sentiment Index, on top of the major equity indices, and you'll actually be able to see the business cycle in real time. It's kind of cool. Yeah, Mike sees there's no recession on the street stands. Yeah, there's a lot of people out tonight. Maybe it's some sort of an open house for the colleges, Pace University. Isn't it homecoming maybe at Columbia or something like that? Who knows? A lot of people out tonight for a Sunday. Oh, that's right. Hey, Michelle McGraw, what's up? Good to see you, Michelle. So let's take a quick poll in the chat. So tomorrow is Columbus Day, or as they renamed it, Indigenous Peoples Day. So who here in the chat has off? Now, the fixed income market is closed, but the stock market is open. But who here in the chat is off tomorrow? Who here has a long 3-day weekend? Sabrina Fair says you're working. Copy that. Brian says I have off. Buff 20 says, what is the PMI exactly? It is the Purchasers Managers Index. If you type PMI in the chat, !PMI, I programmed the Nightbot to drop the link of the Institute for Supply Management Purchasing Managers Index. CG says I have off. Very nice. Hey, Alex Lopez says we work in Miami. My colleagues in LATAM have off. Very nice. Yeah, I gotta work tomorrow, unfortunately. Ooh, FredEx, man. You really got laid off on Friday, my friend? I apologize for that. Raymond G says, yes, tomorrow is Canadian Thanksgiving. That's right. So happy Thanksgiving to all of our Canadian viewers. I forgot about that. Mimi says, I'm off at my state job. Love that. Hope you have a great day off. But if you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams 5 days a week between New York City and Miami. Yeah, got yours. With all these people off, it might be a low volume day tomorrow. I think you're right. Well, fixed income, the bond market's closed. So it seems like we're split 50-50. But FredEx, if you really got laid off, shoot me an email. I'll try to help you out. Anything I could do to help, just let me know, man. All right, so we're about a quarter of the way over the bridge. We have this beautiful full moon. And I wanted to quickly talk about the bank earnings. So obviously next week is the official start of Q3 earnings. So we are now starting earnings season yet again. And every earnings season is kicked off with the major financials. So next week we are going to hear from the likes of BlackRock. We are going to hear from Wells Fargo, JP Morgan, Citi. And I think we're going to have a pretty disappointing earnings season for the financials. And here's why. Now, this is my opinion. I could be completely wrong. Again, this is very, very opinionated. But a lot of these investment banks are going up against very, very tough comps. So last year, in 2021, this was when all the COVID stimulus was sloshing around. The deal flow at these banks was huge with the initial public offerings, the SPACs. So the investment banking revenue was through the roof. The equity underwriting revenue, the fee income was huge. And the CEO of Goldman Sachs actually came out and even said, these earnings are not sustainable. We've been seeing huge amount of deal flow, huge volume due to all this liquidity and low interest rates. Well, we've talked about this before, not to beat a dead horse, but earnings are coming up next week. Initial public offering activity is down 97%, and the SPAC market is pretty much non-existent. So I think you're going to see investment banking revenue be cut in half. And as it relates to the banks that have really, really big mortgage exposure, you're also going to see a huge revenue decline in mortgage originations, underwriting, and refinancing. Because if you think about it like this, when the Federal Reserve dropped interest rates during COVID to near zero, everybody was trying to refinance their home loan. But if you remember about 2 weeks ago, I had asked everybody in the chat, I think there was about 900 people at the time, I said, if you still have debt on your home, how many of you have a below 5% interest rate? And I think more than 80% of you said, yeah, I'm paying about 5% or below. Well, as of yesterday's video, on Friday, I think the average 30-year fixed rate mortgage was 7%. So if the vast majority of people have a 30-year fixed of below 7%, well, you've essentially taken the refinancing to zero, like literally zero. So I think banks are going to have a tough go about it next week. We'll see. But check this out. We have a beautiful view of the One World Trade Center. Julia M., thank you for joining tonight. We'll see you tomorrow. Hey, Joss Evelyn is here. Says, thank you, it's a beautiful view. Thank you for being here. Yeah, got your, that's a good point. Savings accounts are down. Only way for them to make up for the revenue is credit cards. And I think historically, consumers are actually holding a lower balance on their credit cards. It's a good point. Hey, Miguel says hello from Argentina. Hey, Miguel. Thanks for joining. G. Raymond says US Canadians, or us Canadians are hearing so much negativity about New York City. As of late, is it warranted? I was in New York City in 2013 and Williamsburg in 2006 and left for safety concerns. Well, we have seen an uptick in crime in New York. And I'm not going to pretend like everything is all rosy and nice. But if you're going to visit New York, I think it's still a great time to visit. I think it's still the best city on earth. I think you just need to be safe. You know, watch your back when you're on the subway. You know, don't go out late at night. And I think you'll be fine. Just basic street smarts, and I think you'll be all right. I think this is my favorite shot of the Brooklyn Bridge right here. What do you guys think? This is the Brooklyn Bridge here. Miguel says, Tom, what are your thoughts about Argentina's 100% annual inflation? Is it 100%? I thought it was like 60%. It may have gone up. You may be right. But I think it's horrible. I think it's terrible. And I think you're seeing an overwhelming response from central banks all over the world stumbling above themselves to raise rates. G. Raymond says, interesting to hear your perspective. Sounds good. Lovely shot of the Brooklyn Bridge. Thank you. Yeah, I mean, I think it's just, look, has crime gone up? Yeah, I think, you know, we can't deny that, but I think you just need to be aware of your surroundings, just do the basic street safety, and I think you'll be all right. So check this out. You can see the Empire State Building here. You can see the H&M Building, the Bank of America Tower. You could see right here with this blue top, that is the One Vanderbilt Building. And right to the right of that, you see that very, very bright yellow light? Well, right behind that is the iconic 432 Park Avenue, which is the Billionaires Row building. And even more iconic than that, to the right of that, is the Chrysler Building. So the view from the Brooklyn Bridge, you can see the entire Midtown Manhattan. You could see the Manhattan Bridge. This is actually where we were streaming from last night. And you could see the train, the subway going over the Manhattan Bridge. Wow, check this out. This is a really, really good shot of Midtown Manhattan here. You can see the One Vanderbilt. You can see 432 Park Avenue and the Chrysler Building. This is an amazing shot. I think this is my favorite of all, though, not gonna lie. Just looking at the World Trade Center from up here. You guys want to see the full moon? Check that out. It's almost like the sun. That's how bright it is. Hey, Brad's Brains is amazing shots. I could stand there for hours. I could too, man. If I didn't have to do the stream, I think I'd be sitting up here hanging out. And I think it's good to come up to the Brooklyn Bridge during this time because the winter, I think, may be too cold to do it. Now, this is the Manhattan Bridge. But this is the thing I'm most excited about. So if you guys remember from our old live streams, all of the bike lanes, so the bikers, the people who are scooters or whatever, they used to be all up here, you know, mixing in with the pedestrians. But then, since it was such a safety hazard, the city actually cut the lanes in half, and this is its dedicated bike lane right here. So anybody who wants to come here as a tourist, or maybe if you live here, you want to commute to Manhattan, you have your own dedicated bike lane. And I think that was really good for the city to do that because it was getting crazy dangerous, especially with the electric scooters and the bikes amongst all the tourists. It just really didn't work out. So line sinks like Tommy got to get some thermals on. All right, this is the very famous Brooklyn Bridge arches here. Yeah, Brad's Brains is suddenly not a bike in sight. I was just about to say that. So strange, right? Usually you see tons of bike traffic going across. All right, I want to point out one last thing. Hey, Teresa Diaz, thank you so much for the $1.99 donation. Wow, did we really? 22,000. Oh my gosh, that's insane. Well, thanks everybody. Supposedly we just hit 22,000 subscribers to the Walk Some Wall Street podcast, stream, whatever you want to call it. That's awesome, guys. Well, thank you for the support. I hope you guys are enjoying it. I have an absolute blast doing these live streams for all of you. So I really, really appreciate that you enjoy it. So thank you for that. Wow, I think this is the best shot of the night right here. The beautiful One World Trade Center. You know, I think this is good to come up to the Brooklyn Bridge and look at the Lower Manhattan skyline on a Sunday night, because it's really awe-inspiring, not gonna lie. Not to sound corny or cheesy, but I mean, look at this. Look at all these massive skyscrapers. There's just so much opportunity in this city, in this country. It's insane. Just really gives it perspective. Every single one of these buildings has a person in it, an office, a business, a startup. Massive amounts of opportunity in this city and in the United States of America, greatest country on earth, in the greatest city on earth. Can't ask for anything better than that. I'm definitely ready to hit the ground running tomorrow on Monday. And you got the Empire State Building. Hold on, let me zoom in on the Empire for you guys. Wow, check that out. So that is the Empire State Building lit up in its iconic white. Estes says, hey Tom, are you shooting on a GoPro? No, I am shooting on an iPhone 13 mini. But I do sometimes use the GoPro, I'm not gonna lie. I do use the GoPro sometimes. Hey, who dat Dave is here? What's up, Dave? Cindy Foley, thank you so much for being here. Michael says, love the stream. Thank you, Michael. Mariana, Texas is new viewer and enjoying the live stream. Thank you so much for being here. Hey, Robert Mohammed, what's up? This is good to see you tonight, Tom. Hope all is great. Great views tonight. Thank you, Robert Mohammed. Tariq says, Tom, Delta Airlines earnings this week. What are your thoughts? Yeah, so you're right. Delta is reporting. I think Delta reports what, on Tuesday? When do they report? No, on Thursday. So Delta Airlines, BlackRock, Domino's Pizza, Walgreens, all report on Thursday. Now, I never, ever get involved with the airlines, and I'll tell you why. And again, this is just my opinion. The airline business is very commodity dependent. So, you know, their profitability fluctuates. Oops, sorry. Their profitability fluctuates based on the price of fuel to, you know, fuel their jets. What prices can they sell them for? So it's not really a business that I want to get involved in. And there's obviously going to be no innovation in the space pretty much ever. So I try not to really pay too much attention to those airline earnings, but I will say this. The only reason why I do pay attention to airline earnings is to sort of gauge consumer sentiment as it relates to people getting out for business travel and getting out for regular discretionary travel. And here's my prediction on that, and let me know what you guys think. I think I've said this before, which obviously is not going to show up in this earnings report, but this holiday season, I'll give you one more shot of the iconic arches here. I think this holiday season, Thanksgiving, Christmas, New Year's, is going to absolutely shatter records as it relates to Americans traveling. And the reason for that is because this is the first holiday season when you pretty much have absolutely nothing to worry about as it relates to COVID. Now, I know that could be considered a hot take, I get it. But last year, I mean, people were still a little bit on the fence. And I mean, I don't want to turn the stream into an argument about COVID, but last year, some people were still a little bit concerned. I get it. You know, I have a grandmother too. I was a little bit on the fence of, you know, should I be really traveling to go see her? I don't want to, you know, get people sick. I get it. But this year, I mean, the vaccines have been out for 2 years now. And people are sick and tired of staying indoors. So I think you're going to see an absolute tidal wave of people traveling for the holidays. And we already saw that kick off with Labor Day. Labor Day set records for American consumers traveling. So I think that could potentially be good for airlines. But, you know, I'm sure Delta is going to give us their data about if business travel is back. We'll see. Horatio Snipes says COVID is still active, Tom. Yeah, I mean, I get that COVID is literally still around. I guess sort of what I was trying to make a distinction to was the concern is not that grave as it was, when we didn't have vaccines and things like that. I understand it's still a real thing. I understand it's still around. I understand people are getting sick. But as it relates to people being in fear and not going and traveling, that's sort of what I was trying to say. James Tigris' PayPal backtracks on policy, fining users for misinformation, $2,500. Yeah, that was ridiculous. That's ridiculous. Pink Curbs says, have you tried skateboarding the Brooklyn Bridge? We have. We have before on the stream, yeah. All right, I just want to say one more time, I understand that people are dying from COVID. I get it. The point I'm trying to make is that the fear levels, and the fear was so great it was restricting people from traveling. That is not nearly as high anymore. People are back to the office, people are back at work. So I think that you're gonna have a boom in travel. That's the prediction. Hey, Mohammed Yusuf says hello from Egypt. Welcome to all of our viewers from Egypt. Well, I think PayPal's share price is absolutely pounded, like 90% lower, trading at its 52-week lows. So I think the most scary thing we need to worry about this earnings season is some big misses across the board. Because let's talk valuation. I think it's appropriate to talk valuation now. So the S&P 500 is roughly trading at a forward PE ratio of about 16.98. So 16.98 times forward earnings. Now, I understand that it is technically below average, right? It's below the historical average, but I want to just quickly compare previous bear markets to where the forward PE ratio was on the S&P. And then we'll sort of talk about why I'm getting into this. So in 2020, when we had the COVID crash, the S&P 500 was trading at a forward PE of 13. In 2008, during the Great Financial Crisis, the S&P was trading at about a forward PE ratio of about 9. Now, I think I retweeted this on my Twitter. So if you want to follow me on Twitter, where you can see all of my, financial posts that I post on there, you can follow @WalksWallStreet. But I think we've sort of seen these major declines in the major equity indices not be due to earnings declines, but merely because of re-rating due to higher interest rates. I'll wait till maybe we get past the vendors here. But this will take you right off at Chambers Street, Center Street, and Park Row South as we exit the Brooklyn Bridge walking path. And we are going to head up towards Penn Station, 34th Street. A lot of people walking the bridge tonight. So here's what I think, and we'll quickly review this again. So when interest rates were extremely suppressed or artificially low, right? What we saw during the last bull market was a lot of these very high beta speculative growth stocks really taking off and generating the majority of alpha in many people's portfolios. However, here's the problem with just focusing on top line revenue growth. When interest rates go up, investors start to demand earnings right now, or present earnings today. And when interest rates move up, a lot of these growth stocks, especially in the software as a service or the SaaS-based market, they don't have current earnings now, but they may have projected earnings maybe a year or two down the road. So those earnings that are projected a year or two down the road, as interest rates go up, the present value of those future earnings decline, and decline rapidly. So Wall Street starts selling off those stocks to re-rate them or revalue them for a new current interest rate environment, also called PE compression, multiple compression. So I think the vast majority of the sell-off that we saw in this market was not based upon earnings recession predictions, but just simple re-rating for higher interest rates. And I think that's going to potentially come into play this Q3 earnings season. We already saw AMD, which is a very big semiconductor company, issue profit warnings across the board. So if earnings start to come in worse than expected, that's 16 times forward earnings that I just read to you all live on the stream. Well, maybe that's actually 20 times forward earnings, right? If these earnings estimates are going to be cut, which means I think we still have a lower ways to go as it relates to prices across the board in the S&P 500, the NASDAQ, and the Dow Jones Industrial Average. So phase one is a reduction due to interest rates. I think phase two, if this earnings season is bad and we continue to see profit warnings from major companies, a lot of these banks are going to reevaluate the S&P 500 for a earnings recession, and that could get pretty ugly. But it's going to create a lot of opportunities, amazing opportunities for everybody. So just be cognizant of that. Hey, Junior is here. This is good evening, Tom and everybody. Good to see you, Junior. Thanks for being here. Patrick, New York. Zach Drew. This is BTC still holding yearly lows from June. Yeah, I mean, so Bitcoin is very highly correlated to the NASDAQ. And my concern with Bitcoin is also closed well below its 200-week moving average. So I think if we have this earnings recession, which I think we're probably going to get, I think you're going to see Bitcoin prices go lower. But I mean, that's going to just create unbelievable opportunities. Because let's talk about the semiconductors for a minute. I think it's appropriate to talk about those semiconductor stocks that have been getting pounded. Hold on, let me see where we should go. You know, I'm not going to walk up Broadway. Let's go over one more avenue and then we'll walk up. But this is Park Place. And if you walk all the way down here, that'll lead you right into Trinity Church and on Wall Street where we just were. So we'll cross two more avenues and then we'll start to head up. Hey, DN says, I believe there is a global crisis with recession, especially with the war overseas in Ukraine. Yeah, I mean, DN, I think that's a pretty good assessment. I think the threat, I would say, of a massive global recession is rather high. But this is what I'll say, because one of the things that we saw from these semiconductor companies is that they're starting to cut demand. So as it relates to AMD, and let me know if you guys could hear any wind noise in the mic. It is very, very windy. I apologize. I gotta go to the Apple store and get my adapter for the microphone. So let me know if the wind noise is really horrible. But one of the things that we saw in relation to AMD is they were warning that PC demand is really, really cratering and falling off a cliff. Now, I could sort of touch on that a little bit. Wow, look at this sort of courtyard here. They made it absolutely beautiful. Check this out. Really beautiful here. But as it relates to AMD, they were saying, look, we're having decreased demand for PC sales. And I would like to provide my opinion on that, or maybe a little bit more clarity. Because during COVID, I'd say during 2020, I was actually a part of some of these very, very big deals as it relates to selling Chromebooks that were connected via like a SIM card or LTE to different school districts and things like that. And this is what I'll say. The amount of pull forward, P-U-L-L forward, that happened during 2021 and 2022 was unbelievable. This is a good restaurant cut by Wolfgang Puck. Good steakhouse, 99 Church Street. If you guys are in New York City, let me know, and I'd love to accompany you guys here. We can hang out, have a nice steak. Anyway, the amount of pull forward that we saw in spending on Chromebooks, on computers, especially at the state and local government level, was literally unprecedented. And I know that word has been overused, but I mean, some of the purchase orders or the POs that I was working on, it was almost to the point, and I gotta be careful with what I say. There was so much money floating around due to the COVID money that was given to school districts, state and local governments. It was almost as if they didn't know what to spend it on. Seriously. So I was working on 30,000 unit orders for Chromebooks with LTE connectivity to bridge the digital divide, which is a very real problem, by the way, because a lot of people don't understand, especially here in New York. I'll give you an example here in New York and in Union County, New Jersey. There's a very large portion of students in the New York City Public School District and Union County, New Jersey, that unfortunately don't have an internet connection at home, right? So think about how disadvantaged those students were during COVID when everything was remote schooling. You had about 15% of all these students that couldn't even participate. So talk about an even a more egregious situation for that, economic divide. So you saw so much spending on Chromebooks, laptops, desktops. I'm talking like 40,000 unit orders. Like we couldn't even keep up with demand. And everybody's trying to call Armageddon now to say, look, demand is falling off a cliff, but there was so much pull forward. It was unbelievable. These school districts, state and local governments spend so much money on all of this equipment because it's almost like they had to, right? We talk about, COVID-19 accelerating that shift to the cloud, right? I was working with many clients, both in the SLED public sector, Fortune 500, Global 2000, helping them build out SD-WAN networks on a moment's notice, on a whim. So a lot of those spending in terms of routers. So if you think of like a Cradlepoint, if you think of like a Teltonica, all of those modules, all those routers, Cat 5, Cat 6 routers, you couldn't even get them. They were flying off the shelf. And now these businesses just don't need them because they already have them. So I just wanted to make that a quick point because I was reading the CNBC headline. Hold on, I'm going to turn around here in a minute, give you guys a really nice view of the World Trade Center. But I was reading the CNBC headline and it says, demand is falling off a cliff. And I think the demand is actually normal. What I think happened is they were forecasting demand based upon 2020 demand. And that demand in 2020, 2021 just wasn't sustainable. So I think you're gonna see a lot of this stuff just go back to normal growth trend, not necessarily as they like to say, fall off a cliff. Does that make sense? I think the comps that they're comparing it to was a little bit different. Does that make sense? Hey, Alexa is here. Alexa Jordan says, I work for a district in the capital region of New York and can tell you this is 100% true. Hey, Alexa, thank you so much for your comments. Yeah, and I try to give you guys as much information as I can without like explicitly telling you like too much information, but and within what I'm legally allowed to tell. But I think, you know, because there's a lot of portfolio managers that watch the stream. So as you're building your financial models, I think if you only, so here's sort of a gap that I see. I think a lot of analysts on Wall Street and PMs, they're super analytical and very, very smart, but they don't have experience like working in like tech sales or software sales or something like that. So they don't really understand deal flow from our perspective. Does that make sense? Now, I may not understand deal flow from like an investment banker's perspective, but everybody wants to say, you know, AMD's demand is falling off a cliff for their chips because a lot of them go into computers, which I get. So here's what I think is going to happen. I'm going to get right to the point. This market is going to way overcorrect to the downside on Nvidia, on AMD. They're gonna pummel these stocks into the ground across the board in the semiconductor suite. And that's going to set up unbelievable, unprecedented opportunities for everybody, right? When these stocks start to turn up again. Because the long-term theme is still intact. Definitely manage your risk. I wouldn't be buying these things here. But what I'm trying to say is, think about the big macro picture. If we had to sit here and talk about the main technological revolutions of the next 5 to 10 years, it's cloud computing, it's IoTs, it's autonomous vehicles, it's AI, machine learning. You think all that innovation is just going to stop because we go into a recession? No. We're going to continue to advance in these particular sectors of the economy. EVs. I think there's something like 2,500 chipsets in one EV as opposed to maybe 900 in a non-EV. So what's going to happen is markets tend to overcorrect to the upside, right? Valuations tend to get extremely stretched, and valuations are going to get crazy extended to the downside. And this is going to be a big opportunity in the coming years for us to get exposure to these semiconductor companies that are literally going to be the tools and the building blocks to build a modern economy, right? AI, machine learning, autonomous driving, EVs. It's all going to need chips. So the demand, yeah, we may have a little bit of a demand recession, maybe for 1 or 2 years, but this thing is going to slingshot back like a rocket ship in terms of demand, and these companies are going to continuously crank out earnings. So I would just be cognizant of that. I think we're a very risk-off time here, but once we start to get back into the environment when the Federal Reserve is being more accommodative to monetary policy, the economy starts firing on all cylinders again, the opportunities are going to be so big that we're just not even know what to do with ourselves. It's going to be so big. Hey, Marcelo Gill is here. What's up, Marcelo? Thank you for joining. So I want to show you guys a very unique building in New York City. This is what you call the Jenga building. Now look at how unique this looks. Extremely unique building. Maybe once we get a couple of blocks away, you guys can see a little bit better. We're good to see you, Marcelo Gill. Tommy is here. Good to see you. Mike says, I want to buy a cheap Corolla and keep it forever, not an expensive EV. So Mike, did you guys see this statistic that came out of Barron's today? Now, it was so interesting that I actually have to put the phone down so I could find it, because you just reminded me of what I wanted to ask you guys. Okay, team, check this out. So did anybody read Barron's today? Hey, Elliott Wave Review. This is Tom. I appreciate your optimism, but you seem to ignore the tense geopolitical situation in the world that affects the economy. Yeah, so Elliott Wave Review, I'm not saying go out and buy these semiconductor stocks now. What I'm saying is, on a long-term time frame, if you think about the new innovative technologies that are going to be built, just because there's war, just because there's an economic downturn, doesn't mean people go crawl under their bed and they stop going to work, right? So I think the Fed is going to overdo it. I think it's going to wash out a lot of these stocks. They're going to be down 70, 80, 90%. And then once we get into a new quantitative easing cycle, there's going to be unprecedented opportunities. I'm not saying go out and buy these things now, but you make a good point. Elliott Wave Review makes a good point. We cannot ignore the geopolitical crazy stuff. Now, does anybody have, because I've been sort of muting this out, beautiful Empire State Building up ahead. Does anybody think Vladimir Putin is credible when he says he's going to use nuclear weapons? Does anybody think there's any credibility to that? So this is the Jenga building. I think it looks very unique. I know that, what's it called? I think Dusty Cole's not a big fan of this building. Vinny says yes. Road Dog says yes. Connor says not. No, it's a fear tactic. Troy 1995 says they have to use them at some point. Brad's brain is like, it's hideous. I think it's all right. All right, I gotta look again. We have a ton of controversy in the chat about the Jenga building. Yeah, Luke Timber, I know about that. It's horrible. I don't know, I'm gonna hold firm. I think I like it. So I recently retweeted something. I forget who the tweet was originally by. And let me explain it. It does tie into Vladimir Putin's possible use of a nuclear weapon. I just need to give you some context. Now, somebody placed a massive options trade on the CBOE volatility index, or the VIX. So betting that the VIX would have this massive spike, right? This big blow off. And we always talk about this on the channel. And one of the things that I say is, for the market to really bottom, you really need to see the VIX blowing off to, let's say, I would say above 50, above 55. Now, why would a trader buy a bunch of call options on the VIX, betting that the VIX would explode to the upside? Why would they do that? The only thing I could think of is that 2 days prior, Vladimir Putin floated out the possibility of using a tactical nuclear weapon. So is this particular trade an Armageddon trade? Or is this just some sort of portfolio hedge or something like that? What are your thoughts? If you guys want to see what I'm talking about, if you follow me at Walks Wall Street, I think it's like scroll halfway down, maybe a couple posts. I forget who the analyst was, but somebody bought a ton of call options on the VIX, and this could potentially be like an Armageddon trade. I'm not sure. I don't know what their thought process was, but has anybody seen that? Did anybody see that trade? Robert says every prediction has come true so far. Shiva says, by the way, Putin may not end up using nukes, but he will use biological weapons of some sorts. Hey, Ed Dunkel's here. This is probably Michael Burry. He's always a ray of sunshine. Yeah, that's true. Good to see you, Ed. Hopefully you had a good weekend, man. Thank you for joining tonight. Ed, are you off tomorrow? Tomorrow is Columbus Day, Indigenous Peoples Day. And if you're off, hope you have a good long weekend. I got to work tomorrow, unfortunately, but we'll see. So now we have the Jenga building and the One World Trade in one shot. Okay, DWG says, I hid under my desk for the Cuban Missile Crisis in 5th grade. It's the same feeling now. Yeah, well, I think President Joe Biden was at an event here in New York City. I think it was a fundraising event. So President Joe Biden was here at a fundraising event, and supposedly he said that we are at the greatest risk of a nuclear sort of event since the Cuban Missile Crisis. Okay, it seems like everybody in the chat is about 50-50 split on this. Ed Dunkel's like, nope, I got clients coming in tomorrow. Understood. Well, good luck. Hope you have a good day. Work tomorrow. So here's my take. Now, I think wow, look at this. This is a great shot. I love coming here to Canal Street as we head to Soho, because these buildings are absolutely beautiful with all of the fire escapes here. And check this out. Oh wait, no, that's just, my eyes are terrible. I thought there was a guy hanging out on the fire escape. Okay, Vinny says, trader bet that the VIX could increase by 150 by late March through a series of block trades. The trader, most likely one person, according to the market participant, bought 50,000 call options. Yeah, so Vinny, that's what I'm talking. That's the trade I'm talking about. So what do you think is the thesis there? Or do you think you think it's just a big non-event? Okay, Gott says, Tom, most people think the nuke will be as small as it can be, but the fallout will go to Russia and his people will revolt against him, so they say. Yeah, so I think I'm gonna respectfully sit this one out, and I'll tell you guys why. I think you know. I don't have any. I'm really, really bad when it comes to geopolitical conflict predictions. Now, if we think back to the live streams before, this is before Russia invaded Ukraine. Okay, before that, there was tons of speculation about it. Are they going to invade? Are they not going to invade? And I was in the camp that Russia was not going to invade. And here was my thesis. And I promise I'm going to tie this back into the financial talk. I know you guys hate talking political, but I think this is a major event that moves the market. So I just want to explain the position. So my thought process was, look, the information that we were getting over the weeks leading up to the invasion was that Russia is actively moving a lot of military equipment to the border and saying that they're going to invade. So in my brain, I'm like, why would anybody? I'm like, if I was Vladimir Putin and if I was really going to invade Ukraine, why on earth would I tell anybody that I'm about to invade a country right before I'm going to do it? That doesn't make any sense. Now, granted, I have no military experience, and I don't really know anything about Russia, right? I don't. It's being transparent. And then Russia goes and invades Ukraine. I was so wrong. And I think where I went wrong was I'm thinking as a rational person when I should have been thinking like Vladimir Putin. Right? I was thinking like a rational, normal person, normal Tom. Yeah, why would I ever tell somebody that I'm going to invade? But Vladimir Putin is not a normal person. So I got that one way wrong. So I think I'm just going to sit all this out. And I really don't know. That's not my wheelhouse. I have no expertise in sort of geopolitical conflict. Now, where I think it's going to really impact the markets is when it comes to headline CPI. And the only thing that we really had going for us as it relates to the consumer price index is we just started to have energy costs come down, right? Mainly because crude oil made that big move from about 130 all the way down to about $70 a barrel. Now, crude has since rallied all the way back to $90 a barrel, above its 50-day moving average. I think as this war continues to be drawn out, on top of the fact that OPEC is sequentially or in tandem. Oh, this is Ryan Serhant's new office. Here, I'll show you guys the building while I'm explaining this. I think the longer this war is drawn out, the higher fuel oil prices are going to go, and that is going to negate any form of progress that we've made in getting that headline CPI number down. In which, in turn, the Federal Reserve is going to continue to tighten in perpetuity until we make some progress, and equity valuations will go lower. But really quick, I think this is important to explain because we do talk about real estate all the time. On the corner of Broome Street and West Broadway is Ryan Serhant's brand new office building. And I believe Ryan Serhant is one of the most successful real estate salespeople in the entire United States. I think he's sold more luxury real estate than any other person last year. And his agency, Serhant, is actually now tasked with selling the beautiful penthouse at Central Park Tower. Now listen to this. Listen how crazy this is. Now, if there's anybody that could sell this thing, it's this guy, Ryan Serhant. Very sharp, very good sales guy. As a salesperson myself, I could just tell by looking at somebody almost if they're good at persuasion and sales and business. So he is tasked with selling the Central Park Tower penthouse for I think $250 million. Isn't that insane? So the brand new Central Park Tower that was designed by the Extel Group, who also designed 157, which was the original Billionaires Row building that kicked off the entire trend. They're trying to sell the top 3 floors for $250 million. Now, that's probably not a market that is very sensitive to interest rates. So I don't think the buyer of that particular, or a prospective buyer of that particular unit would be like, you know what, yeah, I think if rates were at 3.5%, maybe I'd pull the trigger on that $250 million property. But you know what, now that rates are 7%, I think I'm gonna have to wait. I think I'm gonna have to hold off. I think it's just a completely different market, but wow. So Ed Dunkel's might be the first $1 million HOA. Holy crap. Now, I think somebody in the chat said that the property taxes would be like $70,000 a month, something crazy. Fund Feed says it would be just like an investment. Yeah, it'd probably just be some place to park wealth overseas, or something else that I don't really want to mention. Hey, Mike says, I was 10 years old during the Cuban Missile Crisis. Remember asking my parents if missiles were going to hit our city. They assured me no, but I could tell they were very concerned. Yeah, I mean, Mike, it's really just a crazy, crazy time we're going through. And I think what's very concerning to me also is North Korea has been relentlessly shooting missiles. And I think even so much so that Japan is doing routine, sort of like air raid drills. All right, guys, I have to plug in the external battery. I got to put you guys down on the ground. Just watch out for the rats. Okay, here we go. Hold on. All right, here we go. We're good. Yeah, I think in order for us to make it all the way back to the Penn Station, we're gonna need the external battery. Hey, Steve CR says, we are Japan's military after Hiroshima. Yeah, that is true. All right. Hold on, I just gotta readjust the camera here. After I plug in the battery, it sort of messes this up. All right, we should be good. So did anybody read the cover story today in Barron's about the strength of the US dollar? Did anybody get a chance to read that? Now, I wanted to cover it on today's stream, but I think it's so important that I want to wait. And I want to wait for everybody to read it first. So, I'm not sure, maybe one of the moderators, I forgot to program it into the Nightbot. But if you just Google Barron's cover story of this week, it's all about the historic strength of the greenback and how it relates to the bigger macro picture of the economy, emerging markets, and we've sort of been talking about that. So if you haven't gotten a chance to read it, I would highly, highly recommend doing so, because I want to have a quick discussion about it, maybe Tuesday or Wednesday. Marcelo Gill says, what is your sell model? You know, speaking of real estate, let's take a look and see how much some of these are going for. I'm streaming on an iPhone 13 mini. So this is a condominium in Nomad, 2 bedrooms, 2 bathrooms, $1,599,000. Seems like a pretty good deal, right? Check this one out. So this is a 4-bedroom, 3.5 bathroom Tribeca condominium for $7,995,000. That one's actually not too bad. This is a 1-bedroom, 2-bathroom loft in Greenwich Village for $2,850,000. And the monthly maintenance, look guys, they're cutting us a break here. The monthly maintenance is only $4,803. What a deal. It's almost as if they're giving it away. So as we move into earnings season, here's what one of my main concern is. Not only a fall off in demand, because you're going to hear from probably the CFO, the CEO, warning on profit, but they're going to give you some sort of a reason for that. And what we saw in Q2 earnings was a lot of earnings declines due to foreign exchange rates and fluctuations in the foreign exchange market. Now, that was way back during Q2 earnings. The US dollar is up 8%, or the Dixie. So the relative strength of the US dollar is up another 8% versus a big basket of emerging market currencies. So you're going to see additional earnings erosion just based upon the fact that the dollar is so strong. So a lot of multinational companies that have a lot of sales overseas, when they go to convert that currency back to US dollars, where they're going to be getting a lot less US dollars. So I think you're going to see continued earnings erosion due to the extreme strength of the US dollar. CM says anything over $1 million is expensive for me. Yeah, I just don't know how these people do it with $5,000 monthly maintenance fee. I mean, I'm not sure. It just seems like an automatic money loser, doesn't it? I don't know. All right, so we are on LaGuardia. We are coming up on the one and only NYU, New York University, where we're actually going to be coming up on the Stern building here. And NYU Stern is very famous for a particular professor that we talk about all the time, which is Professor DeModderan. Now, there's two particular courses at NYU Stern that are very, very, I would say, notable courses. And one of them is the corporate finance course by Professor DeModderan and the securities analysis course by Professor DeModderan. Now, the good news is if you don't go to NYU Stern, for the first time ever, NYU is offering those two specific classes online. Now, granted, you have to pay for them, but so let me cross the street here. So granted, you have to pay for those courses, but here's the good news. For anybody that wants to take those courses for free, so the corporate finance course and the securities analysis course, you could actually take it for free online, but you just will not get the credential. Okay, and I actually posted a link to these two courses in our Discord. So maybe some of the moderators could drop the link. And the reason why I speak of Professor DeModderan in such a very, very highly regarded stance is because his nickname is the Dean of Valuation. And again, this is from an academic approach, right? So one of the criticisms is, why should you listen to a pure play academic when they've never really invested money on, an institutional scale, things like that. But Professor DeModderan is brilliant. And if you are really interested in getting into the investment business, I think it is absolutely critical that you learn the fundamentals of how to read a balance sheet, how to evaluate a business, and DeModderan will teach you all that. Hey, Midnight Blues is Tom. Thank you. I was put in timeout under the Sunbelt Blue username for no reason, and I support your channel. Please check your mods. Midnight Blue, thank you so much for the $5 donation. You are way too kind. Sometimes the Nightbot, so sometimes my Nightbot will put people in timeout or block people because of really no reason. So if anybody is put in timeout or something, just shoot me an email and I'll go back into the YouTube settings. But sometimes I had to just program the Nightbot to be very, very strict because we were getting all these crazy spam bots and people were coming in here requesting cryptocurrency and all this crazy stuff. But I apologize. Brad's Brain says, question for you all. Do you find LinkedIn at all useful in career development these days? I need to start to get my stuff in order to start looking for work in Houston. So for career development, I think LinkedIn is okay. However, I will keep it real with everybody and say I think LinkedIn is in a little bit of structural decline over the past couple of years. Not gonna lie. LinkedIn is sort of almost evolved into Facebook, and it's a little bit depressing to say that. But I think the biggest thing you could do is just work on building your network, right? Getting to know people. So let's say if you're moving to Houston and you want to work in, I'm not sure what particular industry you want to work in, but I would just search people on LinkedIn that have the same job that you want, and I would just message them. You know, you'd be really, really surprised to see how many people would be willing to, you know, meet up for coffee or something like that. So you could just pick their brain. And so that's what I would do. I've done that many times. But I try to limit my time on LinkedIn because it's turned into, it's just, yeah, I'll bite my tongue on that. But I do think LinkedIn is very valuable. Joe Drivers is telling the Mets lost tonight. All right, so if you guys want to check out that course by Professor DeModern, he posts a lot of his lectures for free on his YouTube channel. So if you want to actually see what it's like to take a course at the Stern Business School here at New York University, he actually has uploaded the corporate finance and securities analysis courses to his YouTube channel. Now, you won't get the certificate, but don't be interested in the certificate. Just be interested in actually learning the material, okay? Getting a new skill under your belt. I think that information is quite invaluable. Now, if you want to buy the book is called Valuation by DeModern. And if you're really, really tight on cash, Stern School of Business is right in front of us, by the way. I think you can get it online on Amazon used books for I think $6. It's definitely worth it. It'll probably be the best $6 you've ever spent. You'll learn how to read a balance sheet, just doing the basics. And I think it's so important during these times just to get back to the basics. Hey, Joe C., good to see you. This is the New York Red Bulls one. Love that. All right, Midnight Blue, we'll figure it out. CM says it's annoying receiving all the LinkedIn messengers. Yeah, I mean, I think oh, check this out. This guy's on the piano. I think LinkedIn has evolved. Let's just say that. It's definitely evolved over the years. With Brad's brain, maybe I missed it. What is the specific industry that you want to get into over there in Houston? All right, so this is the northern side of Washington Square Park. And I'll take you guys with me. We are gonna end at 34th Street, Penn Station. That is where I gotta get the train. Can we do a quick time check in the chat? I know we're running over the live stream. I just wanna make sure I'm running on time to get the train. Ooh, 11:11. I think we'll just make it. I think if I walk a little bit faster, I'll make it. Let me cross the street. Okay, Brad's brain says, I'm looking to stay in operations management service, specifically related to HVAC, plumbing, etc. Well, the good news is you'll probably always be in high demand for a job, extreme high demand. CM says, why did you say Rice was a good school for business? I think I was talking about PACE. So PACE. We were walking the campus of Pace University tonight. Dusty Cole says, I'm going to email you too, Tom. Copy that. So just a quick reminder to everybody, tomorrow is Columbus Day, or Indigenous Peoples Day, however they want to call it now. So we will not have the fixed income markets open. It will be closed tomorrow. However, the equity market will be open and trading as we kick off the official start of Q3 earnings. Now, the start of Q3 earnings, we'll go down here and then we'll walk up, starts with the financials. And we sort of did a quick review, but one of my predictions for a lot of these big investment banks is that earnings are going to come in light. And obviously, deal flow is down, investment banking revenue is probably going to be down. And even the CEO of Goldman Sachs himself said last earnings season that those investment banking revenues just weren't sustainable. Ooh, looks like somebody threw something out the window here. And obviously the reason for that is because in 2021, the deal flow was insane. Companies were going public left and right. And we sort of reviewed that brief saying on Wall Street that you feed the ducks when they're quacking. And with liquidity flush in the markets, the ducks were definitely quacking. And Wall Street gave the people what they wanted, which were all these money-losing IPOs and SPACs, in which they've made windfall profits on the investment banking fees, underwriting fees, and the advisory services. But a lot of that stuff is dried up now. Okay, so I think you're gonna see, and we're gonna go over this on Friday, because Friday is when JP Morgan Chase, Citi, Wells Fargo reports earnings. I think you're gonna see at JP Morgan Chase, investment banking revenue was down, equity underwriting revenue was down, advisory services and fees were down. Also, a big component that I think is going to fall off a cliff is mortgage originations. And we know this because of the existing home sales are really in structural decline due to the huge move in rates. So that average 30-year fixed rate mortgage is at 6.95%, probably on its way to over 7% relatively soon. And more specifically, if you talk about banks that have really big exposure to refinancing, well, that business is to zero. That business is literally zero. Who is going to refinance a loan at 7% when the vast majority of people have rates under 5%? So I think this earnings season, things are going to get a little bit dinged up. So we need to be aware of that. Steve CR says crime stats in California with businesses being raided may bring down the market. Well, I don't know about that. Now, one thing I will say, I think Walgreens is reporting earnings, and Walgreens and Duane Reade have had really big issues in some of the major cities with the looting and the theft. And I think some specific locations, maybe in San Francisco, California, as it relates to Walgreens, I think they're actually closing them down. So that could potentially have an impact on earnings. Check this out, guys. So this is the Strand bookstore. This is one of my favorite bookstores in the entire city. If you get a chance to come to New York, please, please, please check it out. Now, I'll tell you my favorite bookstore in the city, and it is East Village Books. One of my favorites. And it's all very old, used books. And one of the good things about that store is they get the vast majority of their books from estate sales. So I've been able to find really, really old, classic finance books, like Reminiscences of a Stock Operator, one of the original copies I have that I found at East Village Books. So check them out. Strand and East Village Books. Really good bookstores. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the stream and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami. And if you like what we talk about and you want my more in-depth thoughts on the market, feel free to scan the QR code on your screen, punch in your email, and you will receive my free investing newsletter. So I write about the US equity market, emerging markets, fixed income, housing, and the like. So if you want even more up-to-date inputs on the market, feel free to scan the QR code, punch in your email, I'll send it to you guys. Hey, photos from around New York, what's up? Photos, you have the pleasure of being off tomorrow, what do you think? Or do you unfortunately have to work like a lot of us here in the chat? Oh, you're right, there is a full moon tonight. Brian, there hasn't been any recent updates since the last one, but I'm working on getting back on a more normal routine schedule, so just stay alert from that. I will let you know when the next one is out. Joe Driver says, Tom, what road are you on now? So we're walking up, coming up to 14th Street, so this is Union Square in New York City. So right on Broadway. East 14th Street, Union Square. You'll see the hotel right in the distance here. But when we make this left, you're gonna see the Whole Foods and also the train station where you can get the NQRW trains 4, 5, 6. All right, just let me cross here. Yeah, Mike TL says Whole Foods, $10 for a head of lettuce. Whole Foods or whole paycheck, as they call it. Hey, Midnight Blues, Tom, thank you for the lovely streams as usual. Thank you, Midnight Blue, for being here. I appreciate it. We'll get all the stuff sorted out, no worries. Gott says, walks in Wall Street, is there a time of night that you were just asking for trouble being out? I mean, I guess it just depends on where you are. I think in Manhattan you'll be fine. Manhattan's a relatively safe place. Buy the books, as many of the Whole Foods are actually priced pretty reasonable. Well, I could tell you with certainty the Whole Foods in Miami, downtown Miami, that's really expensive, crazy. I think I told you guys, but the mixed fruit, I think just under a pound of mixed fruit was like 15 bucks. But then again, maybe you're paying for the convenience, I guess. Now, Amazon came out, speaking of Whole Foods, Amazon came out and said that they're going to hire 150,000 seasonal employees. We'll see if they could even get to that point. You know, as we were talking about automation and robotics earlier on in the stream and last stream that we did last night, it's predicted that by 2024, Amazon will have exhausted the entire talent pool, which means all of the people that they could hire have either been hired by Amazon, fired, or rehired already. So I think it's not a point where you need or you want to sort of replace workers. It's almost like you need to start investing into robotics and automation, or you're just not going to be able to do the things that Amazon wants to do, like same day delivery, next day delivery. Hey, Roxanne Robles is here. Says we cannot find people to work here in Tennessee. Yeah, so Roxanne Robles, there was an interesting article in the Wall Street Journal that said small businesses are having a very, very hard time of hiring people. But the bigger name companies are overstaffed. Now, why do we think that is? And I think many of you have already commented, hey, I see Two Wheel Freedom in here, dude. What's up? Good to see you, Two Wheel Freedom. Hopefully you're doing well and safe from the hurricane. I know you went to the Carolinas. Hopefully you're back now in Tampa, Florida, safe and sound. But I think it's just a lot of people just don't want to do these monotonous jobs anymore. I mean, what do you think it may be? I mean, a lot of these service jobs, warehousing jobs, manufacturing jobs, it seems just like people just don't want to do them. It's very, very hard to recruit for them. The employee retention is very, very low. Employee churn is up. Because sometimes in my regular day job, what I'll do is I try to help companies increase their employee retention. And the companies who have very, very difficult times increasing their retention are the companies that pay between $15 an hour and $30 an hour. And over 70% of the workforce cannot work remotely, which means they're either in a customer service facing role, hands-on, in the hotel industry, manufacturing industry, trucking industry, big box, retailers, things like that. Home healthcare is another huge, huge industry that is booming, but their employee retention rates are very, very low. Hey, Mr. Wonderful is here. Good to see you. Yeah, Marcy, that's a good point. Marcy says many are doing these jobs, but can barely make ends meet, and the jobs are really, really hard. Yeah, they're super, super labor intensive. I think you're right. Now, this begs the question, should we just be throwing as many resources as possible into automating these jobs away just to make life easier on humans? And I think that's a really good argument. And I tend to agree. But within that process of doing that, it's very, very important that we are also simultaneously investing into those people that were doing those jobs to help them re-educate themselves and retool for a new economy. Wow, look at this beautiful shot of the Empire State Building here as we come up to the Flatiron District. So this is East 21st Street and Broadway as we approach Madison Square Park. Photos from around New York's like 9.7 to 10. Travelnista says, yes, in retail store, we need more self-checkouts and less humans. So Travelnista, I think we did a quick poll in the chat before to say, do you guys like self-checkout or do you not? And surprisingly, we were pretty split, 50-50. About half the chat says they actually didn't like self-checkout. Now, I would like to reiterate, I will not shop at Dwayne Reed or Walgreens because they don't have self-checkout. I'll only go to CVS because every time I walk into a Dwayne Reed, oh, that's a pigeon. I won't show you guys. It's too gruesome. Every time I walk into a Dwayne Reed or a Walgreens, the line is backed up so long. But every time I walk into a CVS, yeah, there'll be a little bit of a line, but it's moving really, really fast because they have self-checkout. Now, why Dwayne Reed doesn't have self-checkout is beyond me, but they don't. Hey, Zozo Bob says, I do like cashiers, but I'm spoiled by Publix. Yeah, that's true. Good to see you, Zozo Bob. Thank you for being here. Yeah, I mean, Frank Garcia makes a good point. Says, Tom, small businesses can't compete and pay those higher wages. That's a good point. Good to see you, Frank. Dr. Longus says Publix is great. Publix is fantastic. Ooh, Teresa Diaz says 11:30. I think my train takes off at 11:53. So we got to turn the burners on here, everybody. Don't worry, I'll take you guys with me. I'm not going to drop you off here like a piece of dirt. I'm taking you guys with me if I have to throw you on my back. You guys are coming to Penn Station. You know, also, I got to give the city of New York a big, big thumbs up. And hopefully if the battery holds out, you guys will see what I'm talking about. They completely redid Penn Station on the inside, and it looks fantastic. And no, I'm not talking about the Moynihan train station. I'm talking about the original old and nasty Penn Station. You guys have to see this. I mean, when I show you this, your jaw is going to be on the floor. And I'm not exaggerating, by the way, because if anybody has been in the old Penn Station, where the ceilings are about 6 foot, you're scraping your head up against the ceiling, this looks beautiful. They did an amazing, amazing job on Penn Station. So 2 thumbs up for the city of New York. I mean, the place looks great. Yeah, Roxanne Robles says Penn Station was gross the last time I went there last year. And you're correct, it was disgusting. But you guys got to see it. I'm going to show you tonight. Hey, 48 is here. Says, can't wait to see the train station. Yeah, I can't wait to show you guys because for those Long Islanders or maybe even, you know, tourists, chances are if you were visiting New York, you probably fly into John F. Kennedy Airport. You probably take the air train to Jamaica Station. And from Jamaica Station, you probably jump on the Long Island Railroad to come into Penn Station. So that's the first thing that people see when they come to New York. And in my opinion, over the last 10 years, maybe even 20, that's really, really embarrassing as a city to welcome all of our guests into Penn Station. I think it was embarrassing. But now, they did a fantastic job. I think they raised the ceiling height. The ceiling height must be about 30 foot ceilings in there. Lots of light. Really, really nice. So I give credit where credit is due. Hey, Tish TV, what's up? Good to see you, Tish TV. Hopefully you had a good weekend. Salim says, love your videos, thank you. Cynthia feels like we got 20 minutes. And I gotta start walking a little bit faster. Patrick, New York is like, I'm scared and excited at the same time. I think we'll just make it. This is 26th Street, Broadway. We got to go to 34th Street, and 7th. We'll just make it. Sunshine, New York City is like, that's how I traveled through JFK. Forgot names, cutting it close. I think we'll make it. We always make it just in the nick of time. Somebody says, how long is your train ride? The train ride is about 40 minutes. About a 40 to 45 minute train ride. Depending on the train conductor. So I'll tell you guys a quick story of my train conductor. Now, this train conductor is extremely strict. So he goes over the announcement every time. And he's like, if you want to arrive to your destination on time, he's like, you need to have your ticket ready. He's like, here on the Long Island Railroad, we only accept tickets, no stories. He's like, we do not accept stories. We only accept tickets. Because, you know, if you're riding the train at midnight, there's people that say, oh, you know, my phone died, I didn't have my ticket. And this guy, he refuses to open the doors, and he'll make you wait 20 minutes, and he'll squeeze the money out of you one way or another. Which I'm not a big fan of that, because at the end of the day, I got to get home, I got to work in the morning. But for some reason, this guy is such a grouch, and he will not let these people off the train unless they pay their fare. Now, I get it. It's the right thing to do to pay your way, but I mean, if you're going to hold everybody up, I mean, you know, if somebody can't make the fare, I mean, just write them a ticket. You don't need to shake them down while I'm on a train. But he's like, no stories. We do not accept stories, only tickets. Hey, SoCal Lawrence, thank you so much for the donation. Thank you for the $2 donation. Very kind of you. I appreciate your support.
I'm very,
Sabrina Ferris is 54 degrees in New York. East Coast, what's up?
We're headed away.
Wow, look at this shot. This is really, really nice shot of the Empire here. Sorry if I'm not reading the chats, everybody. I'm just gotta hurry to get the train. But I think we covered a lot. We pretty much covered the day-to-day action that's gonna be happening next week on Wall Street. Tons of inflation data, which should influence monetary policy decision. Hey, Sunshine NYC, thank you so much for the $10 donation. You are also too kind. I appreciate it. Thank you for the support and for being a great moderator. Tons of inflation data, Q3 earnings kickoff. We're going to be covering it, the day-to-day action, deep dive into all the investment banks, deep dive into the consumer price index, both the core CPI and the headline. And then we'll finish the week off on Friday with the University of Michigan Consumer Sentiment Index. We'll cover it all, don't worry, right here on Walks from Wall Street. Ooh, Pup says, Tom, did you go to the ferry tonight? We didn't. We missed the ferry by 5 minutes. Hey, FDNY, love that. Cayenne Pacific says this is a good power walk through Midtown. Yeah, it's a nice walk. Not too hot, not too cold. Beautiful night out here in New York City. Hey, Anonymous. Good to see you. This is why would anybody want to live in New York City? Well, I think if you're very early on in your career, New York City is by far the best place to build a network of very, very high-performing, educated individuals. So I think if you're just graduating college or, you know, early on in your career, This is the best place in the world to build a network, bar none. And the reason for that is because we not only have the best schools in the world here, New York City attracts very, very hardworking and disciplined people. And if you can build a network of hardworking, disciplined, entrepreneurial people, not only from New York, but from all over the United States and the world, I mean, that's invaluable. I mean, that's worth the cost of tuition in and of itself. You'd be surprised. I mean, I know that New York City has its downsides, I get it. But if you utilize New York to your advantage, it's just like you're gonna be shooting lights out all day. Is there a lot of distractions? Yeah. A lot of bars, a lot of clubs. But if you put your nose to the grindstone and you really focus, like for 5 years here, build a network, build a product, whatever you want to do, I mean, you're gonna have so much success here. Success is gonna be oozing out of your eyeballs and you're not even gonna know what to do with it. And that's not hyperbolic speech, that's true. Trust me. Great people here from all over the world. Ooh, photos from around New York, thank you. 11:37. I think we're gonna make it, folks. I think we're gonna make it. But before we conclude the stream, I want to show you guys the brand new Penn Station because they did do a phenomenal job. So if you're visiting New York, this is what you're going to see when you first arrive. So photos from around New York. Have you seen the new Penn Station yet? If not, maybe tomorrow take a walk through it. I think you're gonna be impressed. Hey, Sparks Carnival, good to see you. Gary, welcome everybody, Mr. Wonderful. But if you guys enjoyed the live stream tonight, feel free to hit the like button and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami. We talk about the financial markets. We talk about tech. We talk about good food to get around here. It's a good time, so. Ooh, I gotta weave in and out of the cart guys. That's all right. Miss Flores, good to see you. Tons of construction here, but the Penn project is going to be fantastic in maybe 2 or 3 years. The whole thing is going to open up. All right, here's the new Penn. Now, I want you guys to focus on how big the ceilings or how tall the ceilings are here. So for anybody unfamiliar with New York's Penn Station, if you look over in the corner, that is how tall the ceilings used to be. They used to be that height. Look at how tall they are now. This is a complete transformation. It almost looks like you're not even in Penn Station anymore. Look at how fantastic they made it. I know, isn't it crazy? So just look at the difference. Look at how low the ceiling is over there. But look at how tall the ceilings are here. So this used to be the height of the ceiling. Everybody used to be scraping their heads. But look at how beautiful they made it. They did a great job. And it's not even 100% complete yet. All right, team, I'm shot. We did about a 3-hour live stream. But I had a good time, and I appreciate each and every single one of you coming out and hanging out with me tonight on the Markets Look Ahead live stream. So if you're new here, feel free to hit the subscribe button, leave a like if you're new, and to the mighty bull, have a good night wherever you are. There's always a bull market somewhere. You just need to know where to look, have a positive outlook, and go attack the week ahead tomorrow. We'll regroup on Monday night, and we'll see you then. Deep Value Alex, photos from around New York, Cayenne Pacific, Domote, Salim, Mohammed, Dominic, all of our new viewers. Thank you so much. You could do whatever you want next week, but just don't quit. That's what I'll leave you off with. We'll see you tomorrow, 8:30. Thanks, everybody.